The CARES Act has several options for retaining employees. There is, first of all, the Employer Retention Credit that we're going to talk about today. Then we have the Paycheck Protection Program loans, and these can be forgiven if used for payroll costs and if you meet other criteria. And then there's the option to defer payroll taxes. The employer portion of the Social Security tax can be deferred over 2 years. If you want to learn more about the Paycheck Protection Program loans, you can view the COVID-19 loan forgiveness and comparison on-demand webinar. So let's talk a little bit about the interaction of the PPP, ERC, and deferral. If a taxpayer has a PPP loan but repays it by May 7th, then they will be treated as if they'd not received a PPP loan, and they'll be eligible for the Employee Retention Credit. The employer can choose to defer some of its federal payroll tax payments, and the rest of the payments can be used towards the Employee Retention Credit. So you can use these in conjunction with each other, but not for the same dollars. So an example for deferral with ERC is the employer has a federal employer tax deposit obligation of $8,000. The employer is eligible for a $5,000 employee retention credit, and the employer chooses to defer $1,500 in employer Social Security tax amounts. $6,500 is still remaining. The employer decides to use $5,000 towards the employee retention credit, and the remaining $1,500 is paid into the EFTPS system. So now let's talk a little bit about the Employee Retention Credit. The Employee Retention Credit is a fully refundable credit. It is a maximum of $5,000 credit per employee, and it's allowed against the employer's Social Security tax. Qualified wages include employer health expenses paid, and it only covers the wages for a certain time period after the pandemic began. Calculation is based on the number of full-time employees, and the credit is included in income. So the Employee Retention Credit is designed to encourage businesses to keep employees on their payroll during the COVID crisis. It's a refundable tax credit or advanced tax credit of up to 50% of up to $10,000 in wages to an eligible business who's been financially impacted by COVID-19. The credit is calculated quarterly, and it is for wages paid after March 12th, 2020, and before January 1st, 2021. Wages are not limited to cash payments, but also include a portion of the employer-provided health care. Employers can be immediately reimbursed for the credit by reducing the required deposit of payroll taxes that have been withheld from employees' wages by the amount of the credit. Eligible employers will report their total qualified wages and the related health insurance costs for each quarter on their quarterly employment tax returns or Form 941, beginning with the second quarter. If the employer's employment tax deposit are not sufficient to cover the credit, the employer may receive an advance payment from the IRS by submitting Form 7200, Advance Payment of Employer Credits Due to COVID-19.